Hey, it's Clay Trader, and this will be a video chart on the SKF, which is an ultra short of the financial sector, and it's leveraged by two. So what that means is when the financial sector is going down, this one is going up at two times that rate. If you're familiar with FAZ, same concept, except that one is leveraged by three times. So SKF does not move quite as fast as FAZ, but nonetheless they both are doing the same thing. They are leveraged and they do the opposite of what the financial sector does. So if the XLF is going up, these are going down. If the XLF is going down, these are going up. So that's pretty much how these work. I want to break down the SKF because it's a good stock to keep in mind, especially for just the overall economy. As you know, financials are playing a big role in things, so it's good to monitor the stocks that reflect what's going on in the financial sector. And this one depends completely 100% on the financial sector, so it's a good one to follow. And sometimes I get questions about FAZ. Well, can you do a chart on FAZ? The thing to keep in mind is SKF and FAZ's charts basically look exactly alike. The only difference is going to be the increments of percentages, because, like I said, FAZ is leveraged three times and this one's only leveraged two. But if you pull up charts and put them side by side, they're for the most part the exact same and telling you the same exact thing, because they are both, once again, dependent on the financial sector. So this is the daily chart, and I'm not really going to focus too much on it. For the most part, just been going sideways, but there are some kind of interesting patterns that are shaping up on the shorter time frame charts. So I want to get those highlighted and kind of see if we can have an idea of what's going to be going on next week and then the rest of this month. So first, let's hop on down to the 60-minute time frame, and let me extend this out. And I want to draw a pattern here. And just first, to explain this pattern, let's look at some of these lows. We have a low here, 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 here. Now, as you can see, these lows are, in the long run, they are getting lower. We had a low here, we had a low here, came up a little bit, then we had another low, came down lower, and so forth. However, they're not getting low in terms of just dropping down and then dropping down, so it doesn't look like low here and then way low down here and then again way low. It's more a steady type of drifting low. So that gives us the ability to draw this trend line here, where if I take this and kind of just draw this over like that, you can see that it's slow and doesn't have a big slope on it at all. Just a nice little drift downwards trend line there. Now let's talk about these highs up here. You can see we had a high here, 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 and you get the point, drifting downwards. So this gives us the ability to draw a downtrend line that looks something like this. Now, this is what is called a falling wedge, and a falling wedge is actually, believe it or not, a bullish pattern. So for the overall economy in the short term, at least, or at least the financial sector, would actually be bearish, because remember, this goes up when the financial sector is going down. So if there's a bullish pattern shaping up here, then that means that there's, it would be bearish for the financial sector. And what you want to keep your eye on is just these trend lines. Now, just because this is a bullish pattern, a falling wedge, that doesn't automatically mean that this stock's going to explode and run. If charts were able to predict things like that, then everybody would use them and be millionaires. But it is saying that you definitely need to keep your eye on this, because lower lows are being made. However, they're not happening at a high pace. It's real slow. Yet these higher highs are being made at a pretty fast pace, so it's getting pretty coiled in here. As you can see, room is running out. So at some point there's going to need to be a decision made. The other thing to watch is, although we're making lower highs, our lows are for the most part staying the same. But look down here at the MACD. The MACD is trending upward. So this is what's called a positive divergence. And it is suggesting that we could be getting a possible move up here. And with a break of this uptrend line, could see up to $43, maybe 44. But if we hop back to the 30-minute, let me extend this out. You can see the same thing taking place. We have this downtrend line here and then this trend line here all being the same. So it's a matter of time, but just like the 60-minute, running out of room, somebody's going to need to make up their mind. So I wanted to get that pattern pointed out because, let me go back to the 60, because if this trend line here falls, these patterns are usually pretty good in terms of then getting a nice little move upwards. Now, how high could it go? Technical analysis says you should take this high and this low, subtract the difference, and that's how high it's going to go on the break. But I mean, it's possible this could run up to, once again, 43, and then if it can get through there, go up as high as 50, because there is that previous high that's over here. So that would take quite a bit, but the stock definitely is starting to get coiled up here. So it's kind of decision time, and it's going to need to make up its mind. On the other side, if it does fall below, then I'm looking for the XLF, the financial sector, and therefore the overall market to go on a really nice rally again. Because right now we've just been going kind of sideways, but if this pattern breaks to the downside on some bigger volume, then I'm looking for the overall markets to make a nice new leg to the upside. So once again, this was the SKF Ultra shares for the financial sector, and we'll see what happens on Monday and the rest of this week. Thanks for listening.